Hey everyone, welcome back to Corporate Decoder, the place where we untangle those super dense financial reports and find the juicy bits. Today we're diving into Therapeutics Incorporated's latest 10Q filing, and let me tell you, it is packed with some wild developments. So, what is this report? Essentially, it is a quarterly update from the company to the public, showing how they're doing financially and operationally. Think of it as a check-in on their health. We're going to sift through the numbers, the risks, and what it all means for their future. And hey, if you like getting these kinds of insights without the corporate jargon, make sure you are subscribed. We also have a growing Discord community where we break down these filings even further, so check that link in the description. Alright, let's jump straight into the financial health of Therapeutics Incorporated. Looking at their balance sheet for the 30th of September 2025, they have total assets of about $4.3 million. On the other side of the ledger, their liabilities are a bit higher, totaling $3.8 million. This means they have a bit of a working capital cushion, but not a huge one. Digging a little deeper into their liabilities, the figure for accounts payable and accrued expenses is quite significant at $2.26 million for September 2025, compared to $667,272 in December 2024. That is a big jump and suggests they owe a lot more to their suppliers and for other short-term obligations. Despite the increased liabilities, their total assets have also grown to $4.3 million by September 2025 from $2 million in December 2024. This growth is largely driven by an increase in cash. Speaking of cash, their cash and cash equivalents stand at $3.1 million as of September 2025. This is a healthy increase from $872,599 at the end of 2024. This boost is likely from their recent financing activities we will talk about later. Now, let's look at how much money they are actually making, or in this case, losing. For the 3 months ended the 30th of September 2025, their net loss was almost $1.9 million, and for the 9 months of the year, that loss ballooned to about $3.47 million. This is a common theme for companies at this stage, especially in the pharmaceutical development field, where research and development costs are super high. Their operating expenses, particularly general and administrative costs, have seen a substantial increase. For the 9 months ended the 30th of September 2025, these costs were $3.43 million, up from $1.23 million in the same period last year. The company attributes this to legal and advisory services related to their direct listing. Research and development expenses, crucial for a pharma company, remained relatively stable. For the 9 months ended the 30th of September 2025, they were $230,636, which is a slight decrease from $236,190 in the prior year. That is interesting considering they are trying to advance new drug candidates. This is where things get really interesting. As of the 30th of September 2025, Therapeutics Incorporated actually has a positive stockholders' equity of about $504,000. That's a massive turnaround from a deficit of $177,432 at the end of 2024. This swing is almost entirely due to a huge influx of cash from issuing new shares. Their additional paid-in capital, which represents the money investors paid above the par value of the stock, jumped from $19 million to over $23 million. This reflects all the new money they raised. You also see a new line item here called subscription receivable, showing a negative $52,699. This means some investors have committed to buying shares but have not yet fully paid for them. Looking at the cash flows, it confirms their funding story. For the 9 months ended the 30th of September 2025, they used $1.38 million in operating activities, which is typical for a company burning through cash for R&D. But financing activities brought in a massive $3.74 million. Mostly from issuing new stock. Now, something important to note is that all prior period numbers have been retroactively adjusted for a 2-for-1 forward stock split. This is basically a cosmetic change that doubles the number of shares outstanding and halves the price, but it does not change the overall value of the company. It is just done to make the historical share prices look more consistent with the current price. This stock split is why you see the shares outstanding go from about 28 million to over 56 million potentially, and the dollar amount for common stock also doubling. For example, as of the 30th of September 2025, they have over 28 million shares of common stock issued and outstanding, and their par value amount is just a few $1,000s. This report highlights a significant concern for any investor, liquidity, and the going concern. They have about $3.1 million in cash as of September 2025, and they estimate this will only carry them through the first quarter of 2026. This raises substantial doubt about their ability to continue as a going concern. meaning if they don't get more funding quickly, they might not be able to stay in business. Therapeutics Incorporated is developing a platform technology called permafusion designed to improve how drugs work. They are focusing on skin conditions like eczema and nail fungus. They also have some FDA-cleared medical devices, and they are working on a thermostable intranasal vaccine. That sounds promising. Their financial instruments are mostly cash equivalents reported at fair value. As of September 2025, they had $513,695 in cash equivalents, all categorized under level 1 inputs, meaning they are based on quoted prices in active markets. This indicates a very high degree of liquidity for these holdings. This section explains many of their recent funding events. They had several offerings including Regulation crowdfunding, Regulation ASU, and Regulation D offerings. A significant one is the 2025 Regulation D offering, where they issued shares and warrants. In March 2025, they had a private offering under Regulation D to accredited investors. They sold shares for $4.59 each and also issued warrants. Many of these warrants were immediately exercised, bringing in more cash. They also have a large share purchase agreement with Gem Global Yield LLC SES. This agreement allows them to sell up to $85 million worth of their stock to Gem over 3 years, with certain conditions related to their stock price and trading volume. They are still working to secure the full amount of funding from this agreement. The company operates as a single reportable segment. Their chief operating decision maker, the CEO, looks at the overall net loss to make resource allocation decisions. There is a notable related party transaction. They engaged Davis Polk and Wardwell LLP for legal services related to their stock listing. Mr. Arthur Golden, a lawyer from Davis Polk, joined their board of directors. As of September 2025, they had accrued about $1.2 million in legal costs for Davis Polk. This is a crucial section detailing what happened after the 30th of September 2025. On the 8th of October 2025, they completed a direct listing of their common stock on the Nasdaq Global Market, trading under the ticker TTRX. This is a major milestone. Also, on the 8th of October, they granted ASAs to employees and directors totaling $400,000 in value. ASAs are essentially promises to give stock in the future, vesting over time. They also issued 240,000 stock options to an employee with an exercise price of $10. Options give the holder the right to buy stock at a set price. When the stock price goes up, these options become more valuable. They also issued over 160,000 shares to fulfill a commitment fee related to that Gem share purchase agreement, adding to the dilution. Now let's talk about the risks. The company acknowledges that future financing agreements could lead to significant dilution, meaning existing shareholders will own a smaller piece of the company. They also mention the unpredictability of capital markets and the possibility of not securing enough funding. A significant risk they faced was a material weakness in their internal controls over financial reporting related to accounting for stock-based compensation. They believe this has been remediated as of the 30th of September 2025, but it is a reminder of the challenges smaller companies face in building robust financial systems. Their entire business hinges on getting their products approved by the FDA and then successfully bringing them to market. They have some FDA-cleared medical devices, but their main focus is on drug development, which is inherently risky and expensive. Following their Nasdaq listing, the stock price is expected to be volatile. They list a host of external factors that could cause this volatility, from industry changes to economic conditions. This is pretty standard for newly listed companies. They are very upfront about the potential dilution from the Gem agreement. They can sell shares to Gem at a discount to market price, and the number of shares sold will depend on their financing needs. If they sell a lot, existing shareholders will own a much smaller percentage of the company. Overall, Therapeutics Incorporated is a company with promising technology but facing significant financial and execution risks. On one hand, their permafusion technology has potential, and their Nasdaq listing is a huge step towards gaining visibility and access to capital. They've managed to bring in substantial cash through various offerings and stock sales, which is essential for funding their drug development pipeline. However, the company is still burning through cash at a high rate, and their continued success is heavily dependent on securing more funding. The potential for significant dilution from their financing agreements is a major concern for existing shareholders. Furthermore, the inherent risks in drug development, including lengthy and expensive clinical trials and regulatory hurdles, mean that profitability is still a long way off. If it ever materializes, their ability to successfully navigate these challenges, particularly securing adequate funding and achieving FDA approvals, will be the key determinants of their future. It's a high-risk, high-reward scenario typical of early-stage biotech companies. Alright, that is our breakdown of Therapeutics Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description where we explore these topics even further. Thanks for watching, see you next time.